Alright traders, I am back again with another video. This video we're going to talk about, just look at the pound pairs that we talked about yesterday to see where they stand now. See if we had anything happen and see where we are, if we could get into any opportunities or if you might have missed any opportunities that we talked about yesterday. So if you want to see what we really talked about yesterday, go back to the video prior to this one, and it's looking at the pound pairs. Alright, and see if you can see what the market did compared to what we were talking about. Did we get any of the opportunities? Did you catch any of the trading opportunities? So yesterday we talked about this pair. This is the pound Aussie. Started off talking about, you could see the market in a nice uptrend. All Ichimoku signals are bullish. You got a TK crossover that's bullish. Chiku spans above the price. You got a future that's bright, and price was above the cloud basically, but price was strong, in a strong trend to the upside, and the way I can say or tell is basically it stayed up above this Tenkan-sen line here, and then you could see how it bounced off of Tenkan-sen a couple times. You had a bounce here, you had a bounce here. Here we were a little flat because we were still trying to get that momentum, but once that momentum built, pretty much you could see where we bounced off of Tenkan-sen, bounced again. Here's another bounce. This is the bounce we talked about yesterday. Alright, so when we talked about this yesterday, we still had this was where we were yesterday. All right, and then when we did the video, this was attempting to move higher, and then today it closed much higher. I'm in this trade now, currently trading the pound Aussie. The thing is, I planned this trade off of this candle. Alright, and as long as this candle wasn't violated, I was going to stay with the trade because I was looking at the market bouncing on Tenkan-sen, so that was my trading opportunity, bouncing off of the Tenkan-sen. Now if it came inside the TK zone, I would have looked for a bounce off of the Kijun-sen here, and then if it got past that TK zone, then you just look for your levels, look what the market's going to do. There's going to be support levels below you, so the first level of support based off of this chart with Ichimoku is going to be your Tenkan-sen, then your Kijun-sen, then your top of the cloud and bottom of the cloud, and after that you have no more support. Alright, everything's dropping to the downside. Alright, but for a change of direction, I look more to the fractals more than Ichimoku. Ichimoku is a little slower. Price has already moved much farther than I may want it to by the time I realize that we have a change in the direction with Ichimoku, so therefore I don't rely on it totally. But to get the bias and to get the understanding of the market, I kind of like to use Ichimoku. Okay, but just looking at this again, we had a Tenkan-sen bounce. All signals were bullish. Pretty easy trading opportunity, using price action to get into the trade off of the Tenkan-sen bounce. All right, so nothing really hard about looking at that because it was an easy signal based off of the rejection of this zone right here. Alright, so the price wasn't able to close inside the zone, so we still had strength. So therefore I was looking for the market to move above this level. I put an entry at this level. Then I did what I call a zone walk. I can't explain that much right now because I'll be here all day. But a zone walk entry happened on this candle. So therefore basically my zone walk is I have this level here. This is where I'm entering the market. And then the next day the market, when this candle closed down here, the market attempted to move a little higher, went down lower, and then went back up and then took off. When it drops lower, instead of keeping my entry here, I lower it with the market, but I always want to stay above the market and let the market trigger me in. And then that's what I'm doing basically, is eliminating some of my risk, because my stop loss wants to be here. And even with Ichimoku, sometimes you get down to this Kijun-sen. All right, but I want my at least to be down to this point. Now that's a big stop loss for some on the daily time frame, so you may go down to the 4-hour time frame to look for your trade, or you may go lower. If you can't enter a market based off of the stop loss level, then you shouldn't be entering that market. That's not a good trade for you. Alright, but that's what we did, and then we were triggered in. Got triggered in probably in the middle of this level here, and then the market took off to the upside. So currently a little over 242 pips currently. Alright, so let's go to the next pair. This is the pound Aussie. Let's go to the pound CAD. And pound CAD was the exact same thing, but we weren't bouncing off of Tenkan-sen this time. We were bouncing off of Kijun-sen this time. All right, because you're not in as this trend isn't as strong as the your previous pair of the pound Aussie, because we were bouncing on Tenkan-sen previously and we stayed above that level. But here we bounced on Kijun-sen. You had a little rejection at Kijun-sen. You could see this is where some buying pressure came into the market. You really wanted to look at your entry at this point, right? See here? You want your entry here because you already had the rejection. Then the market dropped a little lower, made a newer low. This is a little bit lower, and then still had a rejection. And if you were late on here, you could still enter that here because you had a nice rejection level to enter, and then you're in profit at this point. So once you get into this trade, you want to shoot for at least this target. All right. So that would be your first target. All right. So I always want to get through my first target and then start looking for my next targets. The easiest way to look for your targets is go to your left and look for the next support and resistance levels. So you would probably just look at that level, see what that is, compare it. You could see it's a nice strong level. Boom, boom, boom. And then the market pretty much close to that level. You might see the market move up to that level, and that's where we might see it fall. Now, do we have any divergence with this? I don't trade divergence, guys, just to let you know that. Never trade divergence. I use divergence as a tool also to help me to just pretty much another confirmation for my entry. All right. So that would be your, if you're shooting from this level, your target would be at this point here at 175,354. Then if the market could get through that point, you're going to probably be at your flat cloud here. Basically, you see that flat cloud right there, and that's where we would be right there. So with that flat cloud, that's going to be your next level that you would shoot to. And if you look back, it's not a great level. Doesn't look like much here. Looks like we had the most level here, so this could end up being a double top if the market gets to this point. All right, double tops look pretty much like an M pattern. I already showed that already, and so I'll do it again. So a double top here will be coming up to this point. We dropped, we come back up to this point, and then we see that thing drop. All right, and that would be your double top. So there's a good possibility that we get to this level here. All right, because the market likes to go to and fro, pretty much to and fro from support and resistance levels back to the next support and resistance level. And basically, the market has a mind. It's a mind of all the traders put together. And a lot of traders are thinking the same things about support and resistance levels. So therefore, that's where you see a lot of things happen. A lot of tell you that the retail traders do not move the market. So most of the big traders are the ones that move these markets. All right. So not the smaller retail traders. And that's where the mind comes in. All right, so that's the pound CAD. Let's move on off of that. No trading opportunity now because we already talked about the trading opportunities yesterday. So now these trading opportunities are in effect and pretty much happening. Pretty much. This pair I didn't really discuss taking a trade at this point because yesterday this really looked like you had a slight rejection here. You had these rejection and indecision candles, but you were trading inside of one candle. All right, so therefore I wanted to box this thing in and then see which way it goes. And I don't like to really trade breakouts, so I didn't want to trade the breakout of the level. So I didn't discuss really taking a trade on the pound Swiss franc. And with Ichimoku, I didn't also want to discuss taking a trade with it because look how flat everything is. It's still flat, and you don't have that. You still don't even have that angulation. So with Ichimoku, if you're trading based on Ichimoku concepts, you want to see how can you get into a market when Tenkan-sen is flat. I mean, that's your short-term momentum, and then Kijun-sen is also flat. That's your mid-term momentum, and then the cloud is going to be your long-term momentum. You want to see some angulation when you get into a trade. You want to have that thing moving up a little bit. Now this is probably where it started to move a little, but you flattened out here and it's doing nothing. And you can see throughout we were flat here pretty much. All right. When you're getting into a trade, you want to see stuff like this. You want to see this happening. Flat here, nothing's happening. Then you could see a little move to the upside here. Then the market starts moving as you see here. But definitely don't want to see a flat Kijun-sen and a flat, especially a flat Tenkan-sen. That's your immediate momentum right there. All right, but on this pair, I wouldn't really be trading this right yet, because I'm going to look for my pullback levels, and I have levels I would look to get into this trade, and then I want to make sure I have the momentum and everything else based off Ichimoku. Now, if you take this trade to the upside, you probably want to wait for the market to come back to a cleaner level. All right, so it's like catching a train. You're above the level that you want to trade, so wait for it to come back. If it doesn't come back, you just missed that trade. I always tell traders that the market is like it's just like going to a car dealer. All right, so each car dealer, the market is a car dealer. You got, your euro US dollar, you got your Aussie US dollar, your euro New Zealand dollar. If you're searching for a Corvette or whatever, and you go to the Aussie US dollar guy and he doesn't have the Corvette you want, you don't buy any Corvette there just because it's there. You want that specific Corvette, so you wait for that Corvette, and you go to another dealer like the Euro New Zealand dollar, and you find that Corvette and you see it's there, so you can buy that Corvette at that point, and he's selling it for the price you want. Now suppose you go to the pound Swiss franc and he has the Corvette and it's not for the price that you want. Are you still going to buy it? No. Why would you buy it? You're looking for it at the price that you want. So therefore, you're going to go to another car dealer, which would be another pair, and you're going to try to get that pair, to get that trade at your price. The trade is the car that you're buying, and the car dealers are the each individual pair. All right, so once you see those pairs and they're not giving you what you want, you don't just take the trade just because. You go look for the trade that you want. All right, so that's what you do as far as trading. Let's move off this pound Swiss franc and go to the pound yen. And again, I'm not going to be discussing a lot of trading opportunities because we talked about the trading opportunities yesterday. So looking at this market, we talked about the trading opportunities in the previous video. So this market here is, look where it was all flat here. Look at this cloud and look at your Tenkan-sen, Kijun-sen, couple crossovers, too many crossovers. You don't want to trade that. So when you look at the market, you just can look at the market and see what it's pretty much doing. So this is more of a ranging market. All right, and I would just look at it as that and probably trade it as a range. All right, and trade this range level. All right, see what the market's going to do at this point. Now, when we trade Ichimoku, if you start learning the advanced Ichimoku, I believe I showed you guys this, then you look at your fluctuation level. It would be the midpoint of the range, and then you can start using your Ichimoku numbers. And it's a little hard for me to just explain everything right now, so I'm not going to get deeper into that, but your Ichimoku numbers would help you to trade this range a little bit. All right, because if you don't, on your numbers, the day of your number, you're expecting a change in the market. If the market comes down here and you hit your number, your Ichimoku number, you're expecting a change in the market. So that higher your probability with your trade. And then you see your price action and you're like, okay, definitely. All right. But this market right now, there's no entry right now or no trade, because you want to get back up to this point. Then you want to see what the market gives you. You want to see if the market's going to break through here. Watch at these points, the lower level at support and the upper level at resistance. You have a lot of a bull trap up here and a bear trap here. A bull trap is when the market takes off and traders all jump in because they're trading a breakout, and then the next candle goes lower and drops lower than the entry of the previous, the low of the previous candle. All right, sometime it makes a new high and then a new low, and that's a big classic bear trap, and then a bull trap, and then the market drops to the downside. The bear trap would be the same thing, the opposite though, where the market drops to the downside. All the breakout traders jump in, and then the market shoots all the way back up, and they're all trapped in a losing trade, and it's hard to get out of that trade unless the market comes back down and gives you an entry. All right, so that's the pound yen. Nothing to really trade yet. You want to wait for your level. Wait to see what the market does when it gets up to this point. If it's going to break through there, are you going to get a chance to trade to the downside? All right, so that's pound yen. Now pound New Zealand dollar. Again, we talked about the same thing. You can see that I'm looking at the same trading opportunities every time pretty much on these pound pairs that I've been talking to you since. So if we go back here and we could see where the market was flat, wasn't doing much because we just came off of a trend to the downside and we stayed below Tinkinson. All right. Then we broke Kijinsen and then we were flat. Then we started to move. We got a nice move to the upside. You could see we stayed above Tinkinson all throughout this trend, all throughout. Then we starting to flatten out a little bit. Then we got a bounce off of Kijinsen, and then we got more momentum to move to the upside again. See, and then we got flat again. The market got flat, but we bounced on Kijinsen a couple times, and then we're able to get a trade. Okay, because you could look at certain things here. I mean, you're trading inside this candle here. Previously, we were trading inside this candle with these three candles and four broke below. This was a classic sign of a probable move to the downside, but it was a fake there, and then the market moved to the upside. You're trading inside this one candle with these 1 2 3 4 1 2 3 4. The fifth day you broke out, and then the market moved higher. And then the market again stayed above Tinkinson. It dropped below Kijinsen, but it didn't close below Kijinsen or Tinkinson. So pretty much you bounced off of the Tinkinson level with a nice rejection, another entry to go to the upside. All right, and then the market's failed again. Now you're trading inside this one candle currently. So if you look at that, you're trading inside that one candle. It's pretty much a range on another smaller time frame. You're inside that candle pretty much, right? Because you could see. And you kind of broke out a little bit here, but I still consider we're inside this candle. Until the market breaks out of these levels, it's not really going to go anywhere. The best thing you could do is maybe go to the 4 hour and look at it as a range. It's a sloppy range for me. I wouldn't trade this. Nope. I wouldn't be trading this. And you wouldn't. But I think like if you look at this on the 4 hour time frame, you put this level up here. You may be looking at this as a resistance level where you may be able to catch a trade to the downside. Now I'm going to go back to the daily real quick. Let's see another thing. Let's see what this market. Okay, so what I'm trying to look for to see if there's any divergence, bearish divergence. And there's slight divergence, but I don't think it's enough divergence. And I believe I talked about this yesterday. I'm going to go to my left here, and I think that divergence will kick in more at one of these levels, more at a support and resistance level. And is this a good level? It's an okay level, but divergence to me doesn't really kick in till it gets to a support and resistance level. Divergence can last for quite a long time, and then once the market hits a resistance or a support level, that's when you probably see it kick in more so. All right, so I don't have an opportunity right here yet. Need to see what the market's going to do at these levels. Now remember, if you do get here, you're counter trend trading, right? So let's go back to the 4 hour time frame. Currently the market's moving to the upside. We're staying above Tinkinson, but we kind of look like we're flattening out here. We're trading inside this one candle, kind of flattening out. The market's flattening out a little bit, much like it was here. Doesn't mean the trend's going to stop. So everything on Ichimoku is still bullish. So I do want to be trading long, but when the market's here, if it's going to drop and pull back and give me an opportunity, it would be on that 4 hour where I would look to get into the trade. Now, when I look into get into the trade for the 4 hour, I have to remember that I'm in a daily trend to the upside, and anything I trade on this 4 hour is going to be a pullback. So suppose I enter a trade, if I did get an opportunity with price action to get into a trade here, and I'm trading it to the downside, my thought would be that it may go to the next level here, because I'm just trading the range, boom, boom. You think it gets up here, then you think it comes back down. That's what you would think, right? But being that you're trading the trend and you're counter trend trading the 4 hour time frame off of the daily, you don't know how far this could drop. It could drop a little bit and then break to the upside. So counter trend trading, you just basically, you don't really know if you're going to make those next levels because the momentum's not on your side, and neither are all the traders. That's why the momentum's not on your side. But eventually maybe the momentum could build up onto your side, and then it does drop farther than we think. And then a correction becomes a trend. All right. So let's get off of this. I'm going to look at two other pairs outside of the pound pairs. So we're on the pound New Zealand dollar. Let's go pound US dollar. I don't remember what I talked about on this pair. I don't believe I was looking at trading anything because we were stuck at this in this point. We're at the TK zone right here. There's a nice setup prior to this level way back here that we would be talking about, and it's not the bounce off of the cloud. It's more so another rejection level that we rejected, and not this level here. So we would trade these fractal levels, which would have given us a good trade right now, and we probably wanted to trade up to this point. So traders will ask me how far do I know where to trade. So suppose I'm getting into the trade here, or I get into the breakout trade here. My target, first target, always is going to be this level. All right, that's going to be my first level, and then I'm going to use somebody on YouTube told me that I'm using my Fibonacci extension tool wrong, so I'm going to use it wrong again. All right, and I'm going to show you what I do because I'm going to use it wrong based off of what they were telling me, but it seems to be right all the time for me. Look, I'm going to go 1, and actually let me not use it yet. Let me draw the numbers in here. So if we look at this, right, Ichimoku moves in waves too, but I'm going to just show you this pattern. This 1, this is 2, and this is 3. How do we know that's 3? Now we got a fractal there, right? People always ask me, how do we know it's 3? You don't have to know it's 3 right here. You don't have to know it's 3 right there, but we can tell it's 3 right here, right? We could probably suspect it's 3 when it's there, all right? But we don't know it's 3 when we're here like this, and we don't have to know that because the market could keep dropping, and then we don't see 3, all right? But if we see in the 1, 2, 3 pattern, then you're getting a reversal off of this level, so the market's going to move higher. All right, so where's it going to move to? All right, your first level that you want to look for, this is going to be your first target. So if you got into a trade anywhere in this area, even a Kumo breakout, you're shooting for this level here. All right, that's going to be your first target, the top of this level, which would be your 1, your 2, where the top fractal is, and then your 3, and then you're looking for 4. Where's 4 at? That's your overall target. That's your overall target. Now you're not always going to make these targets, but these are what you shoot for. That's one target you're shooting for. All right, and then I'm looking for number 4, my 4 level. So the way that I'm going to show you is that you do this. So let's use our tool wrong and see where our target is. There. Okay, so I believe that this was a strong level here. So let me go and look at that. Yeah, this was a strong level. That's why I drew it before. So therefore, we may not even get to our target. And really, I don't know how strong it is because it only looks like it's been tested once. So we're suspecting that that's going to be the next level, maybe a double top again, right? Let's see. Yep, could be another double top if we hit that point. But let's back up. So my overall target, the target that I'm really shooting for, now I have a couple targets because first of all, I said you got to get past that level, right? When you trade anywhere in this point, even if I took the trade right now, all right, I got to get to this level. And then this is a support and resistance level. So we think it is, and that could be a double top level. So we're going to shoot for that level. But in Ichimoku, you have levels, observation levels that you're going to shoot from your N wave patterns. All right, and those levels are going to be, this is one of them. It's a 1-to-1 ratio level, and it's not even just an Ichimoku level. This level is on your Fibonacci extension tool. All right, the 1-to-1 level. So I'll show you how I use it wrong again. All right, but I'm going to show you that. See this 1 right here? This is going to be your most reached level, or sometime your 0.927. But all it's saying is that this length right here is going to be the same here. All right, so that's 1-to-1 right there. All right, and so let me show you how we could even look at that even better. Watch this. I'll erase that, and I'll use this tool. So we'll go from here up to this point, right? That's the top. If I move this whole thing, let me see if I can move it. I believe I could. Now you could see when I put it right there. See, I put it right there. It's going to be the exact same level. All right, the exact same level. That means that's the 1-to-1 ratio. This leg is the same length as this leg. So I always look at it like this. You could say 1, 2, 3, 4 are A, B, C, D. So if we say 1, 2, this is the pullback is your equal sign. 3, 4. Even though we're using it wrong, we're getting the right result. And we're not using it wrong, guys. We're using it properly. I'm just being facetious here. So let me show you again. That would be A, B, equal sign on the pullback, C, and then we shoot for our target D. That's your overall target. Doesn't mean you're going to get there. This is one of your targets. This is another target. And you go lower time frame, see if you got any other targets that you could shoot for. If price shows you that it's trying to break through those levels, then you're good to go. All right. So that's going to be the pound US dollar. And currently no opportunity because you're late. You done missed the opportunity. The opportunity has passed you. Let me see. Let me get this off of the chart. And then let's get on out of here. And then let's move on to the 2 more pairs, right? So that's pound US dollar. Let's go to the Aussie US dollar. So Aussie US dollar may be giving us an opportunity, right? Let's see what that's yielding. Why did I want to look at Aussie US dollar? It's not yielding anything on the 4-hour time frame. We're late to the train. Yeah, we're late. But I just guess I wanted to come over here and show you the same thing that I've been looking for throughout. You could see the strength of the trend. We stay below Kijun-sen for sure, but when we're really strong, we stay below Tenkan-sen. Then you pulled up into the TK zone. See that? And then you still got an opportunity. Bounce off Tenkan-sen here. I talked about this yesterday, I believe, or no, actually I talked about this at my members webinar. I didn't talk about that with you guys here. But then you could see we're rejecting the Kijun-sen level and then trade to the downside. See this rejection here? Then you got your entry, trade to the downside. You closed outside the TK zone. You got all Ichimoku signals bearish, sorry. You got all Ichimoku signals bearish. I love to say bullish, right? That's bearish. This was bearish back here. Price being below the cloud is bearish. Chiku span is bearish. We have all bearish signals on the daily time frame. Okay, so therefore we're looking for that trade to the downside. Now I'm going to start to look at divergence. I will look at divergence because I just want to see where this, I'm going to look for that support and resistance level, and then I'm going to look for where the trade's going to get weak maybe. All right, so when I start to look at that, let's bring divergence in here. I'm looking at these levels. See, I already have them drawn in, support and resistance levels. So there's some support levels there. And you'll see there's a little bit of divergence starting to develop here, right? Because this is doing this. And this is why I tell you divergence lasts for quite a while. So don't get into the habit of just trading divergence. You want to have other things to trade. This is just something like a more confirmation tool. This is still going to the downside, right? Still So that's divergence. Eventually it's going to turn around. I think it'll turn around more at this level because divergence kicks in strong at support and resistance level, and this we saw back there was a strong support level. All right, so let me go off of this pair because we don't have a trade opportunity. We missed the opportunity. All right, your opportunity is passed. So let's go to another pair. One more pair we're going to look at. Let's look at the Euro New Zealand dollar. And I know you guys want trading opportunities. You want me to show you an opportunity in play. And sometimes there is no opportunity in play at the time because I'm patient and wait for the market to do what it's going to do. Now you can see this this Euro New Zealand dollar pair on the daily time frame. Looks like we're in a nice trend to the upside. It got weak, then it tried to stay strong. Now it looks like we were strong, but now we're starting to flatten out. All right. Looking at this, I do believe we're going to see the market. Let me go back farther, see what that level is that I marked there. See how strong that level is. Is it more than once that it gets hit? Okay, back here it's a little bit of resistance. It's not a super strong level, but it does look like it could be quite possibly a good level to look at. All right, so the market may reach back up to that level, which means we didn't hit our top yet, but we have so much divergence here still. All right, because you could see this market is going, this oscillator is going to the downside, the ultimate oscillator, and this is going, it was going to the upside. Once this was still going to the downside, these highs were still going to the upside, but we may have flattened out here. Now, taking this trade would be tricky for me. All right, so I'm going to tell you two different things that I'm going to look at. So we're trading inside the TK zone, inside your Tenkan-sen, Kijun-sen zone. All right, this is your zone between these two levels. If the market breaks out of that level, closes above, I'm looking to trade, but I want to get past this level. So if I can't get past this level, I'll forget about my trade. But if the market comes down and breaks below Kijun-sen and closes below, that's like breaking below your trend line. I'm going to take the trade short to the downside. So I could watch and be patient on the market. Again, I don't have to be in a trade. I'm looking for that specific car that I want. And I'm not going to just take any old car because I want this. And if he's selling me that, why would I buy that and buy it at the price he's selling it for also? That's the same thing with your trade, right? So just wait on this opportunity, see what it yields, see what the market does if we close above. I don't know if you're going to get much higher. If you do break this level, I would start to shoot for this target here then, but you'll see a couple pullbacks and then maybe a move to that level. But then for sure, I would definitely think this divergence will kick in at this level. If not, it's kicking in already. You'll see a fall, a break or close below the Kijun-sen level here. You saw Kijun-sen break here and then the market recovered and went higher. You broke the trend line there. You broke here. You still got cloud support. You broke here. So you just got to watch here. Be careful. You could see that divergence. When we broke these levels, we didn't have divergence here real strong. Now we got divergence building up, but we're still not at a support and resistance level. But again, just be patient on these trades sometimes and you'll get good trades if you're just patient and wait. I'm trading a daily and 4 hours, so my trading opportunities are going to be a little farther spread out than some other people's trading the 4 hour specifically, or the hourly are lower. All right, so that's all I got for you today, guys. Just an opportunity to show you some of the things that we looked at the previous day and see how they came and turned out, and an opportunity to look at maybe trading opportunity with the Euro New Zealand dollar. Just be patient, as I said, but hopefully this helped you guys out, and until next time, guys, have a great one. Weekend's coming up, so probably not a lot of trading tomorrow, which is going to be Friday, then come into the new week and we'll see what we got. Till next time, guys, have a great one and God bless you. So long.